Pretty much everyone in Bitcoin will agree that the price is probably lower than we'd like it to be. But can we look to other markets to anticipate capital inflows and outflows to gain insight into where the price could go? So we'll jump straight into it here on the portfolio monthly returns chart. And as everyone's aware, Bitcoin has been a little bit underwhelming, we can say at the very least, over the past few months. And it feels like traditional markets have just been massively outpacing us, and Bitcoin is really lagging behind, underperforming. But what we can see over the past rolling 1 year basis, Bitcoin has actually outperformed both gold and pretty much all equities as well. If we just go over to TradingView here, specifically on this chart, what we can see is the gold percentage returns over the past year in this orange line here, 46%, and the S&P 500, this green line here, which again, just under 19%. Bitcoin is currently still over 52%, so we are still outperforming, but that doesn't necessarily mean that we aren't underperforming. We aren't where we really should be. If we go to the Bitcoin USD chart, of course, we can see we are at new all-time highs. But again, it doesn't necessarily feel like we're at new all-time highs because we're seeing Bitcoin underperform compared to other industries. So what we can do is if we measure Bitcoin rather than versus the US dollar, a depreciating asset, if we actually measure Bitcoin in units of other comparable hard desirable assets like the S&P 500, we can maybe get a little bit of a fairer insight into the current valuation and comparative purchasing power of Bitcoin. So as we can see, if we zoom out, this looks very much like the standard Bitcoin chart, but there are a few little nuances and differences. For example, the double peak cycle we saw in 2021, the secondary peak was actually lower than the first peak we set, potentially indicating that Bitcoin's additional purchasing power had actually diminished in this second peak. So even though the USD price was higher compared to other assets, we hadn't actually set a new high. Maybe Bitcoin was only higher in dollar terms due to the fact that we'd seen excessive printing. So what we can do is if we just scroll across here, we can see that as I've filmed this right now, we're actually coming back down and retesting this previous all-time high that we set in 2021. So a pretty key level on the chart here. We can see the last time we reached this, we did have a brief bounce and we're coming back down to retest this. But the last time we convincingly broke above this level, we actually set a new high on this chart at 19.64. So again, this feels odd because it's not priced in US dollars, we're pricing it in the S&P 500. And because that price is fluctuating all the time, we can see that it might be a bit difficult to kind of visualize where that may take us. But if we just go to the S&P 500 times 19.64, we can see that if Bitcoin was to reclaim the current all-time high that we've set, then the price would be somewhere around $134 to $136,000. So we are significantly beneath that currently. So again, it does feel like we're underperforming, even though compared to the US dollar chart, we're not doing too bad. On a year-on-year basis, things don't look too bad either. But if we go to the Bitcoin versus gold chart, it gets a little bit more concerning, maybe not concerning, but it really outlines where this underperformance has been. Because if we look over the entire cycle, we're currently significantly beneath the previous all-time high we set in 2021. Now, what I've added onto the chart here and what you saw on the previous chart is a Fibonacci retracement tool or extension. So what you can do is just draw it from the cycle lows to the cycle peak, and this almost outlines potential price targets that we can be watching. We can see throughout this cycle, it's identified some very key levels of support and resistance. And what we can see is we've just reclaimed this upper level, this key level of support on this Fibonacci line. And what we can see is if we are to blast past the current all-time high, well, previous all-time high, the current high that we set this cycle, then it does outline some potential price targets going forward. But again, before we get ahead of ourselves, let's take it one level at a time. If we were to just reclaim the current all-time high, or previous all-time high, the next major level above us, you know what I'm going for, 37.46. Then again, we can go 37.46 times gold. And this would take us to a price of somewhere around $150,000 currently. And again, that's just the all-time high from last cycle. If we look to the all-time high we set briefly this cycle before retracing, then that actually takes us to around $163,000 in terms of its valuation to gold. But what we can do is, again, take this one step further, because looking at these valuations, of course, give us some idea of how nice it would be for Bitcoin to actually be where it maybe should be. But how can we use this data to maybe gain some insight into how the next few months could play out for Bitcoin. So what we can do is if we just add onto the chart, the gold chart here, what we can see is if we just add this on, is there's some very interesting dynamics with gold. And I saw this on Twitter, I can't take credit for this. It's not like I came up with this original idea, but one thing that did stand out to me is every time throughout Bitcoin's history, we've had a huge spike in the price of gold. It just preceded a monumental rally in the Bitcoin price action. Now, not immediately, we can see in every instance, it actually resulted in a few weeks of chop and consolidation in the Bitcoin price action. But as we could see here in 2020, as we could see here in this spike in 2016, and even all the way back here, if we go to 2012, we can see that this spike in the gold price preceded the big monumental rallies we've had, and this has occurred in every single cycle for Bitcoin. So could this big peak that we've just set signify the start of the last stage of the bull cycle? Potentially. I don't think it's going to be explosive as it was in any of the prior cycles, just given where we are in the cycle, just given the supply and demand economics and dynamic, the amount of profit taking we've seen, where we were in relation to the halving event, but it is interesting nonetheless, especially if we look to, rather than again, just gold, if we look at gold versus the S&P 500. Because one thing you'll notice within the cryptocurrency markets is there's definitely a very predictable rotation of capital. It usually starts with capital in stable coins or safe haven assets like USDT, and then it flows into Bitcoin, and then it flows into major altcoins like Ethereum and Solana, and then it trickles down into more and more volatile, more and more speculative assets with lower and lower market caps as people try and make up the gains that they missed by not rotating into those large caps early enough. And the same phenomenon might be true in traditional markets, where we have a little bit of uncertainty in political climate, geopolitical tensions causing fiat currencies like the US dollar strength index, the DXY, to start rallying. Potentially then we see bonds start to do well. And then after that, once there's a little bit more reassurance, we start to see some rotation into inflation hedges like gold. And again, once that tops out, maybe we see it trickle down into equities and other high beta plays like Bitcoin. So what we can see, this red line here is looking at how much essentially of the S&P 500 you could buy with gold. So when it spikes massively to the upside, indicates that gold is outperforming. Because again, recently over the past few months, we've seen equities and gold both rallying together. So it's worth looking at these ratio charts to gain insights into the comparative outperformance. And again, what we can see is when gold has these big spikes to the upside, meaning that it's outpacing the S&P 500, it is historically preceded risk-on environments for crypto markets. And we can see this actually moves on a slightly more frequent basis. We could see by just looking at the gold chart when that massively tops out, that maybe didn't give the best insights because there's not been enough data to really support that. But we can see looking at this chart, even if it's not marking historic bear market bottoms every single time, we can see after this spikes and starts decreasing again, indicating an outperformance in equities, it has almost always led to a sustained outperformance in the Bitcoin price action. Now again, it's not a perfect metric. We can see an example here where it led to just more consolidation. It did lead to a few weeks, but it didn't end the chop we'd had in the Bitcoin price action. But we can see over the past few months, the previous two instances of this happening, these big spikes to the upside before it massively decreases, indicating a rotation into more risk-on assets like equities, it resulted in big monumental moves to the Bitcoin price action. And as I film this, gold looks to have finally topped out. Hopefully we can see equities start to begin outperforming, and potentially that could signify that Bitcoin is on the cusp of a big rotation and a big period of outperformance, especially if we just go back here and look at this chart, which outlines the correlation between the S&P 500 and Bitcoin. Because as much as we'd like to think that Bitcoin is this honey badger asset, just completely unique, decorrelated and decoupled from all other assets, unfortunately, we are still just a high beta play of the S&P 500 with an incredibly strong correlation and just more volatile returns. So if we can see equities begin outperforming, then again, that's a very good indication that we can potentially see Bitcoin outperforming. Like I said, it's not great to see the S&P 500 and gold start doing well, but when we look at these ratio charts and look at the comparative outperformance, look at the ratios between assets, it really clarifies the picture and maybe gives us some insights, not just into USD valuations, something that's depreciating, but look at the comparative purchasing power amongst assets. So just to summarize, and as always guys, if you do like this content, please like and subscribe and leave a comment down below. I really do appreciate it. It's really fun making these videos, but it's also nice to see the number go up, not just in the Bitcoin price, but the amount of comments, likes, subscribers, views, everything like that. It just boosts my ego, it feels good. But as I said, just to summarize, Bitcoin has been underperforming most major assets for what seems like way too long at this point. Although we can see on a year-on-year basis, we are still doing fairly well. Although on a more zoomed in basis, we can see it was just fractionally above the highs we set in 2021 in terms of comparative purchasing power when measuring versus the S&P 500, and we're still actually noticeably beneath the highs we set in the last bull market measured versus gold. However, similar to the rotation of capital we see within crypto markets, where money flows from safe haven assets like stablecoins into Bitcoin and then major alts and then lower and lower market cap, more speculative, more volatile assets, we may see a similar dynamic within traditional markets, with big initial spikes in gold signaling the beginning of rotation into more speculative equity markets, and especially when we look at the chart, not just like gold and not just the S&P 500, but when we compare them against each other and look at the ratio, it really does give some indication that we could be on the cusp of a big rotation of capital from safe haven assets into more speculative assets like equities, and given Bitcoin's correlation with equities, this is probably going to lead to some positive price appreciation for Bitcoin. And as always, if you enjoyed this video, please check out bitcoinmagazinepro.com, where you can check out everything we discussed today, as well as many, many more industry reports, API access, TradingView alerts, you know the sales pitch, all for a fraction of the standard industry price. And as I said previously, let me know your thoughts below in the comments and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.